Good morning, friends. Welcome to another episode of the Block Thrasher Daily Crypto Update, where we cover today's hottest news, trying to simplify crypto, making things as simple as possible with daily news, commentary, analysis, and education. We're going to do quite a bit of education today. There's some analysis, research, overview that has been put out by Kraken Labs. And it's some really good information. So we're going to use that to learn some things. Use that as a launch point. Talk through some big picture concepts and ideas. Well, the roller coaster continues. The volatility continues. Up, down, seesaw, back and forth. Today, the total market capitalization is down 4.9%. Ouch. Just yesterday, it was up 4, 5, 6%. So here we go, continuing with the recent trend of volatility. Bitcoin dominance, 44.7%. Ethereum is at 17.1%. And gas prices are dropping once again. Standard 19 GWAY for those Ethereum transaction fees. Not bad at all. Today's Wednesday, June 30th. It's 9:12 a.m. where I am in the most crypto-friendly state in the U.S. Currently, at least reportedly, it is the most crypto. Texas and Florida are making great headway in that regard, trying to catch up, I suppose. However, I need to apologize for my cunctation, which is our word of the day, for my lateness, for our delay. It's my desire to get the daily crypto update out by no later than 8 a.m. But it has been busy, and I was tired today. I probably could have been pretty close, but I'm also struggling to find good internet connection where I'm at. It's pretty remote, and there's not a lot of good reception. Sometimes I have to use my LTE connection to upload these things, and that can be hit or miss. And in town here in Cody, Wyoming, the internet is slow. Everywhere I've been, slow. Anyway, it's a good word, cunctation, C-U-N-C-T-A-T-I-O-N. All right, looking back at the market really quickly here today. Bitcoin is at 34,723. We're still seeing an increase on the week. It's a 6.8% increase, but down 4.2% in the last 24 hours. And this is pretty much the case across the board with the cryptos this week. Seeing some nice gains, 10, 20, 30% gains, but not in the last 24 hours. Last 24 hours, we're going the wrong direction, turning red. Ethereum is currently 2,134. Binance coin is $2.90. Cardano is $1.32. Dogecoin 24 cents. XRP 67 cents. Polkadot 15.50. Bitcoin Cash 509. Litecoin 139. Uniswap 1771. Solana 3242. Chainlink 1875. Ethereum 5574. Ethereum Classic had a nice gain on the week though, 52.9%. It's incredible. Polygon's $1.12. Theta 672. Internet Computer Stellar 27 cents. Internet Computer 44.56. Wow, Internet Computer really has fallen in terms of total market cap, as we expected, down at number 21 now. All right, that'll cover it for the market cap of the day. Hey, there's good news, though. Good news for crypto. Over 650 U.S. banks will soon be able to offer Bitcoin purchases. Wow. The enterprise payment giant, NCR, on June 30th shook hands with digital asset manager NYDIG to open the gates for 650 U.S. banks and credit unions to offer Bitcoin purchases. That's cool. That's fantastic. That's awesome. Good to see. In this one-of-a-kind deal, community banks and credit unions will be able to offer their clients cryptocurrency trading through mobile apps built by NCR without having to deal with regulatory obstacles. Before this, barring a few Wall Street banking giants, the majority of the banks refrained from offering any crypto-related services and over regulatory concerns. This deal gets rid of that barrier, as NYDIG would act as the custodian for these banks, thus opening the gates for nearly 24 million customers. This enables customers to directly purchase and spend BTC from their banks without the need for third-party exchange. So it sounds like NYDIG is going to be the custodian of these cryptos. So I will bet you that what this means is that when you buy this crypto from these banks, you will not be able to withdraw it to your own private wallet. However, it does say here that they will be able to directly purchase and spend Bitcoin from their banks without the need for third-party exchanges. So that will be interesting. Are they going to incorporate into some sort of kind of payment systems where you can use your debit card and maybe you could, wouldn't that be kind of cool? You could use your debit card and allocate, I'm going to spend X amount on this transaction from Bitcoin. They say we're firm believers in the benefits of crypto and its strategic applications. And that's true for our banking relationships as witnessed by NYDIG and across retailers as well as restaurants and the like. The Atlanta-based enterprise was pushed to make this decision amid the growing demand for crypto assets from clients. The payment giant was quick to capitalize on the demand from banks and credit unions that were tired of witnessing crypto purchases made from their accounts to outside exchanges. Now, this partnership puts these institutions in direct competition with crypto exchanges that had their market monopoly. That's interesting. A lot of these banks have seen that one of the biggest outflows from their depositors is moving money from the bank to exchanges like Coinbase. And so that's part of why banks are so excited to have this capability for themselves and for their customers. NYDIG's crypto portfolio as of March 2021 was around $6 billion, which included at least 30,000 Bitcoins valued at $1 billion, owned by its parent company, Stone Ridge Holdings Group. The enterprise estimates that this deal lets them offer Bitcoin services to approximately 70% of the U.S. banks. Oh, wow. I didn't realize that NYDIG was so big. This isn't NCR's first step towards embracing the crypto sphere. The firm had partnered with crypto payment provider Flexa to allow convenience chain Sheets 600 stores to pay for gas and other goods in Bitcoin and other alts. Well, like I said, good news for mass adoption. Some other good news for mass adoption. Visa makes 5 strategic crypto hires and placements. Visa is clearly on board with crypto, moving in the direction of adding more and more services and crypto capability to their systems. Payments giant Visa has made 5 hires and placements as it continues to build out its crypto team. The company focuses heavily on stablecoins and is gearing up to support central bank digital currencies. Well, of course. Analysts predict that an epic Bitcoin bull run may follow our recent novel price action. Bitcoin broke out about 36K to record a 24-hour high of 36,589 on Tuesday evening for the first time since June 20th, in a much welcomed end-month move that some crypto analysts say is a positive sign of an extended bull run in July. For the past 7 days, Bitcoin has mostly been trapped in the 30 to 35K volatility range, with $34,000 severely playing a crucial role as both a resistance and support level. At the time of press, Bitcoin had retraced slightly to 34,730, still a 2.3% gain on the week. Multiple analysts see the breakout as a significant development for the next Bitcoin price action and general direction of the crypto market, with primary concerns on whether the bull run will continue or whether it's the onset of a bear market. Final bull run is coming. Have a plan, according to one crypto analyst, Rect Capital. Bitcoin's multiple test at 34,500 as a support level could mean that it is gearing up for further upward movement. You got to love all these price predictors. Could, should, might, maybe. He says, great price strength stability at a key weekly support level for BTC. This is the seventh week in a row that has been able to reaffirm this 34,500 level of support. Now, I agree with that. We have been moving sideways, which is good. It seems like the bleeding stopped and there has not been a continuance in the downward trend. Anytime we move sideways through these seasons, these months, is not a bad thing. Just based off of the historical analysis. Of course, past performance is not an indicator of future performance. Anything can happen in the crypto market. And that's why everybody says could and might. We could have some anomaly. We could have some black swan event that could just cause an absolute devastating crash, or we could just take off in an insane way again and see a bull market like we've never seen because of the possibility of inflation, because of the stimulus, because of the printing of money and all that sort of thing, which actually brings us to our last segment. And we're going to spend a couple days going through this. As I mentioned in the introduction, Kraken has a research team. They call it intelligence. And they have done some research and they've written a really, really great analysis. They call it inflation, the insidious thief. And this is something that we've talked about a lot of these things, but this summarizes it all together. And I think it'll be good. We're just going to go through this together and we're going to use this for the purposes of education and to get a better understanding of a number of issues regarding that have to do with inflation. So in today's global economy, fears of inflation are front and center for many. This fear is driven by massive government stimulus in response to the COVID-19 pandemic, man. That's an understatement, man. We have seen unbelievable amount of spending by the government like never before. However, many market participants nowadays haven't experienced truly unhealthy levels of inflation and therefore aren't prepared to protect themselves against it. Yes, the memory has pretty much faded from those who have felt that firsthand, at least in the US anyway. There are others around the world who've experienced this, who know. But for the most part, most of us have been experiencing a very slow creeping inflation over the years. We've seen ridiculous inflation, like massive loss of purchasing power in the US dollar. But we don't really notice it. And for the most part, incomes have risen and it just hasn't gotten out of control. Incomes have risen such that it sort of downplays the effect of the inflation, but it hasn't gotten really out of control. So we haven't felt that really significant inflationary pain. In order to understand where this fear originates from, going back to this article, and how one can better protect themselves from unhealthy levels of inflation, it is paramount that market participants and everyday individuals understand the ins and outs of inflation. In this report, we break down inflation. Yeah, I like it. Let's do it. Elaborate on its causes and effects, discuss how central banks manage it, explain what it means for society, and lend insight into how anyone can protect themselves against it. Do you see that right there? That is good communication. That is good writing. First thing you do is you state what your primary thesis is, which they just did that here. There's a fear of inflation because of government printing and stimulus. And then they outline the key points in that opening paragraph. We're going to talk about the causes and effects of inflation, how central banks manage it, what it means for society, and lend insight on how to protect ourselves against it. And then what you do is you flesh that out in the body of the communication, and then they'll swing back around at the end, summarize each one of those points up again. And that's good communication. I like to see that happening. That's why I want to bring this to you guys. This was very well done. Like I said, we're going to break this up into pieces. So we'll cover today just the basics. What is inflation? Inflation is an economic term that refers to a general rise in the price of goods and services in an economy. A rise in prices causes fiat currencies to lose purchasing power. So your dollar used to buy 4 Snicker bars. Now it buys half a Snicker bar. To put it simply, it's lost purchasing power. Central banks measure inflation by calculating the rise in the average price of a basket of goods and services. Because prices are a function of supply and demand, all else being constant, an increase in the money supply, i.e. greater demand, can increase the general prices of goods and services. The inflation rate is a proxy for understanding how much the average household's cost of living rises per year. Inflation attempts to quantify how much more it costs to buy everyday goods such as gas, groceries, hygiene products, and other common consumer goods relative to how much they cost in the past. Inflation seems harmless when under control. However, it causes an insidious drain on the wealth of the consumer and is catastrophic to an economy when unmanaged. Former U.S. President Ronald Reagan once famously said, "Inflation is as violent as a mugger, as frightening as an armed robber, and as deadly as a hitman." Absolutely. If inflation outpaces the increase of your income, then you're losing your ability to pay for the things that you need. And when that happens rapidly, it gets scary. And on top of that, the reason it's worse than a mugger and an armed robber and a deadly hitman is because it forces you to spend what you have rather than save it. And we'll get into the details of that. But you can't just hold the currency. You can't build wealth that way. You can't just save up money. All right, so what are the causes of inflation? In times of uncertainty or hardship, like an economic recession, consumers don't spend like they usually do, and instead they opt to save because they get worried. Milk is getting more expensive. Cheese is getting more expensive. I better start saving. I better not spend on that extra vacation or that extra whatever. This behavioral shift is because they expect a potential loss in consumption ability, losing a job, or falling real wages. However, there are knock-on effects. If consumers aren't spending, business production declines, employees are laid off, and people make fewer investments. So it kind of has this domino, cascading ripple effect. These effects can create a vicious cycle that central banks often try to mitigate by increasing the money supply to stimulate consumption and investment. By pumping more money into the economy, consumers will have the confidence to spend more in businesses that, in turn, can invest in new or existing products and services. Thus, central banks reinvigorate economic activity to attempt to jumpstart economic growth. Central banks measure this growth in gross domestic product, or GDP, or the total value of all goods and services a country produces in a given year. Now, this is their favorite thing to do. Recession hits, pandemic hits, boom, we're going to stimulate, we're going to print, we're going to pump, we're going to put money in, we're going to try to give people back that confidence, get things rolling. Inflation is usually a direct result of central banks creating money faster than GDP growth. However, this imbalance doesn't always lead to inflation. Money can enter circulation without causing inflation. For example, increased investment enables technical innovations that are generally deflationary, causing prices of goods and services to fall. So like if a company goes in and they put in robotics to make their TVs where they used to have humans doing it, yeah, you lose those jobs, but it also creates, that innovation creates better production, faster production, cheaper production. Therefore, the TVs end up becoming cheaper. So overall, that is deflationary rather than inflationary. In other words, new money is not always frivolously spent. So sometimes that new money turns into increased productivity. Some may save or pay down debt. Even though the money supply is greater than before, the velocity of money fell, the rate at which money is exchanged within an economy. The triangle model, the three root causes of inflation, or what the Keynesian economist Robert J. Gordon termed the triangle model, are demand pull inflation, cost push inflation, and built-in inflation. Now, right from the get-go, I'm just going to come out and say anybody that's a Keynesian economist makes red flags go up for me because they ascribe to this general idea. But what we're doing here is we're just covering the concept of the thought process here. The idea being, this primary big idea being that when an economy slows, when a crisis hits, we're going to just pump money in. And this is what the central banks like to do, and they still like to do. All right, that's enough for today. Actually, we're going to wrap up with that. Tomorrow we'll jump in and we'll look at this triangle model. We'll look at demand pull inflation. We'll look at cost pull inflation. We'll look at built-in inflation and some other data as to what things actually have inflated. And it's amazing to see that essentially what's happened here according to this analysis, and it's hard numbers, it's just facts. There's a chart that demonstrates it, etc. Is that anything and everything the government gets involved in is just like extremely hyperinflationary, and anything that the government doesn't regulate and doesn't touch very much is deflationary. Things get cheaper and cheaper and cheaper because of the improvement, like we talked about earlier, the improvement in the production, the decrease in the cost with innovation. It's unbelievable. All right, this is going to be some good stuff. Come back tomorrow. We'll continue on with this. I hope you have an incredible Wednesday on this June 30th, about to wrap up the month here. And remember, it's always a great day to earn and stack more crypto, even in the, especially if in these volatile times when we have these downturns. Going back to the market, one of my favorite cryptos to stack currently is Elrond Gold, and it was down in the 60s, shot back up to the 80s. Where is it at? It's usually down there there we go, number 63, up 37.4% on the week, 81.55. It's just one example. There are so many great projects that were on a massive discount. All right, friends. Thanks so much for your time. I hope you have a phenomenal day. As I said, I'll see you tomorrow. We'll get back on this inflation thing and talk about it. It's going to be good stuff. All right, see you soon. Bye.